A very warm welcome to Money9's special daily market dose Corporate Central, and through this new show we will get you the pulse of the corporate world of the day. From all the big headlines to tracking details of every ups and downs of shares will be put right in front of you. So let's take a look at what took place in the corporate world today. The Reserve Bank of India may be examining the proposal to reappoint billionaire banker Uday Kotak as a non-executive director on the board of Kotak Mahindra Bank after his term ends in December. As reported by the Mint in the e-voting that ended on 20th April 2023, about 99% of the 10,026 voting shareholders of Kotak Mahindra Bank voted in favor of appointing Uday Kotak as a non-executive, non-independent director on the board after he steps down as the managing director and chief executive officer. RBI approval is not required for the appointment of non-executive directors on a bank's boards. However, the central bank can intervene if it feels that the appointment fails to meet its fit and proper criteria. Promoters who are managing directors and chief executives or whole-time directors cannot continue for more than 12 years as per RBI's April 2021 guidelines on corporate governance in banks. But the tenure could be extended to 15 years at the discretion of RBI. After taking the industry by a surprise with its decision to buy 5G spectrum in auction last year, Adani Group now says that it is unable to find suitable use cases and is going to miss the year one rollout obligations set by the government. Adani Data Networks, which acquired the spectrum in August last year, has decided to approach the Department of Telecommunications seeking additional time to meet the rollout obligations, the deadline for which is August. For missing the timelines, penalties are levied on the companies concerned. At a recent meeting convened by the Telecom Regulatory Authority of India for a status check on rollout obligations, Adani Group had said that it has too little spectrum, which is 500 to 100 megahertz, and is therefore not able to find suitable use cases to roll out any kind of services. The company told TRAI that it has no option but to seek additional time from the DOT. Telecom service providers like Bharti Airtel and Reliance Jio have also not started using the 26 gigahertz spectrum for any services so far, but they are likely to do so closer to the date. These two service providers are, however, using 5G spectrum in 3.6 gigahertz band for providing consumer services. Together, the two have rolled out the 5G services in over 500 cities. Vodafone Idea is the only telecom operator which has not started providing any services so far. Analysts tracking the sector, however, are surprised at Adani Group's inability to meet the deadline, as the year one rollout obligations are very basic. They have also said that the company could have either provided broadband services in any one area or connected any of its airport or ports through data networks. And the Securities and Exchange Board of India on 25th April issued an order cum show cause notice to Amit Goenka, chairman of SL Group, Shirpur Gold Refinery, promoter Jainir Infra Power, Multi Ventures and 5 others for alleged fraudulent practices and manipulation of financial statements. The regulator has directed them to not dilute or sell their holdings in the company. And in an interim order, Sebi noted that Shirpur had allegedly created a scheme to divert funds from debtors to entities of promoter groups. Let us also tell you that Shirpur Gold Refinery is a part of SL Group headed by Subhash Chandra Goenka. At present, the bankruptcy process is going on against this company. Until 2021-22, Amit Goenka was the non-executive chairman and director of this company. According to Sebi, Subhash Chandra's son Amit Goenka and his family members are shareholders of Jainir Infra Power, and in its order, Sebi has issued a direction to Amit Goenka and other entities not to sell their stakes until further orders. Sebi investigation has revealed that the results of Shirpur Gold Refinery were misrepresented so that the assets of the company could be diverted to Jainir through the entities related to the promoter. In return, the properties were sold to the concerned entities without taking any amount from them. Sebi has given 21 days to Goenka and the others to file responses or objections. Digital payments giant Phonepay is reportedly closing a commercial agreement with lending startup Zest Money. Phonepay intends to use the lending startup's technology stack and will waive off its $18 million loan it had offered to Zest Money instead of the licensing fees Phonepay had to pay. Till date, Phonepay has secured around $750 million in funding from investors such as General Atlantic, Rabbit Capital and its parent Walmart. It was last valued at $12 billion. The digital payments major pitched lending as a key strategy for its latest fundraising. With this move, Phonepay's aim of venturing into the lending business would be expedited. The decision to purchase Zest Money's technology stack and hire 150 of the startup staff was part of its larger plan. Reports also added that Phonepay has applied for a non-banking finance company license. After 6 months of due diligence raised concerns, Phonepay backed off from acquiring Zest Money last month. The digital payments major was offering around $90 million in cash for the acquisition. According to media reports, Zest Money is also in talks with a host of investors, including existing investors. However, the decisions are in initial stages. State Bank of India, the country's largest lender, plans to raise capital using a combination of additional Tier 1 bonds, Tier 2 bonds and infrastructure bonds in the coming months, with the debt issuances likely be sizable. Discussions would probably start around May, and by the end of the first quarter, SBI would have a clear idea of how much capital is to be raised initially. As per an ET report, like last year, they will come out with all three types: AT1 bonds, infrastructure bonds and Tier 2 bonds. Latest RBI data shows that on April 7th, bank credit growth was 15.7% year-on, far higher than a deposit growth of 10.2%. The wide gap between loan growth and deposit growth last year has prompted banks to turn to debt capital markets, raise funds and finance the credit demand. Earlier this month, SBI's board approved the raising of $2 billion through securities denominated in US dollars or any other convertible currency during the current financial year. In more news, SBI has begun investor calls to raise up to $1 billion in senior unsecured US dollar bonds of 5-year maturities after having received the board's approval to garner $2 billion in overseas debt issuances this fiscal. The bond, expected to be priced 145 to 150 basis points above the 5-year US Treasury rates, is being sold through 6 lead managers that include JP Morgan and HSBC. And over 1,500 pilots of Tata Group run airlines on Tuesday sent a petition to Tata Sons chairman Emeritus Ratan Tata requesting him to intervene in the ongoing matter with Air India's Human Resource Department regarding revised service agreement and updated salary structures. The petition, which has been signed by 1,504 pilots, stated that the pilots feel that their concerns are not being heard or addressed by the current HR team. On April 17, Air India announced a new salary structure for pilots and cabin crew, doubling the guaranteed flying allowance for pilots to 40 hours. In addition, pilots will receive a service reward based on years of service, while other allowances will be increased and a new travel policy proposed. Two pilot unions, Indian Commercial Pilots Association and the Indian Pilots Guild, have expressed disappointment with revised salary structure and revamped service agreement. Meanwhile, Air India's HR team had on April 16th and 17th sent emails to individual members of ICPA stating that each member was being promoted to the position of senior commander, which would make them eligible for a monthly management allowance and management duties. When members did not e-sign the revised service agreement, they were sent a reminder again on April 20th. On April 21st, ICPA sent a legal notice to Air India stating that the members of the ICPA do not want to be forcibly promoted to the management cadre and wish to retain their current designations and roles, and also the coverage under the protection of labour law. The two unions, ICPA and IPG, on Monday warned that if any union member is fired for not signing the airline's revised service agreement, they will go to any extent to reinstate him or her. Well, so that was today's corporate roundup. Now let's talk about the market. Let's take a look at those stocks which saw some major action today and also understand the reason behind it. The shares of the listed companies of the Gujarat government have seen a strong rise of 7 to 16% today. Actually, the Gujarat Government issued new guidelines for listed PSU and unlisted companies. On behalf of these companies, a new policy has been issued on issuing minimum dividend, buyback and bonus shares. The Government of Gujarat has taken this decision for two reasons. First, for the interest of the shareholders, and secondly, with the intention to increase the valuation of the companies. According to this policy, the listed companies will have to give a minimum dividend of 30% of their profits or 5% of the net worth. Whichever is higher will be the base of the dividend. This means that this is the minimum dividend that will have to be given to these companies. Along with this, it will be mandatory for companies with net worth of at least 2,000 crore rupees with also cash balance of 1,000 crore rupees to buy back shares. Apart from this, a guideline has also been issued regarding the issue of bonus shares. According to this, the companies having reserve and surplus of more than 10 times of the paid up equity share capital will also have to issue bonus shares. Overall, there are 7 listed companies of the Gujarat government and all the companies are currently profitable. And this decision will benefit the shareholders a lot. And according to analysts, the stock may continue to rise further. Multi-commodity exchange share has seen a big fall of up to 8% today. The reason for this fall is the resignation of the company's chief technology officer, Shashank Sathe. Citing personal reasons and also due to his better prospects, he has announced his resignation, which is a bit shocking because the company's chief digital officer, N. Rajendran, has been given the interim charge of the portfolio of CTO. Meanwhile, Dr. Rajendran was with MCX since November 2021, and prior to joining MCX, he was the CEO and Director of Indian Financial Technology and Allied Services, a subsidiary of RBI, as well as the CTO of National Payments Corporation of India. Multi-Commodity Exchange of India is India's first listed national level electronic exchange and India's leading commodity derivatives exchange with a market share of about 96.8% in terms of the value of commodity futures contracts traded in financial year 2022-23. Various commodities across segments are traded on the exchange platform, which include bullion, energy, metals and agri-commodities. Well, that's all for today in Corporate Central. But before we take your leave, let's tell you about some important events and triggers which can affect tomorrow's market. The second round of auction for acquiring the stressed assets of Reliance Capital were held on 26th April, and the debt resolution of this company has gone through many twists and turns over the last 2 years. The effect of the decision of the cabinet meeting at 5 p.m. is out to have a ripple effect in the market tomorrow. Results of companies like HUL, Axis Bank, Tech Mahindra, Bajaj Finserv, Wipro would be releasing their results tomorrow, so better keep a close look at them. The primary market is back in action this week, and this time it's with the Mankind Pharma. Let's take a look, which is hitting the Dalal streak. Our IPO was subscribed 87% by 5 p.m. While the issue opened for subscription on April 25th, it will be available for the public to bid till April 27th. The IPO comprises only an offer for sale and there is a fresh issue portion. So the response by the investors to the issue will be closely watched, considering the valuations which most experts feel are a bit expensive compared to its listed peers. And the IT major Wipro will be considering the buyback of its shares in a meeting on April 27th. In a regulatory filing, the Bengaluru headquartered firm said that the proposal would be considered in a board meeting on April 27th. WellSpan India will discuss upon buying back its equity shares and dividend announced during its meeting scheduled on April 27th. The company will also announce its Q4 of financial year 2023 results after the completion of its board meeting as well. Talking about some global triggers, America's Q1 GDP figures to be released on April 27th. Also, Europe's April consumer confidence data will also come out on April 27th. Well, hope you liked today's episode of Corporate Central and got a sense of the day's corporate world. See you again tomorrow, same time, same place with more new updates. Until then, keep watching Money9.